What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And today we had another green day across the board, basically because the financial sector and the tech sector killed it today. You guys know that those are the most important sectors of the markets, and whenever they go up, at the same time, we are very likely to have a very inclusive and broad green rally across the board. So the Russell 2000 goes up today 1.08%, the NASDAQ goes up 1.95%, Dow Jones goes up 0.74%, and the S&P 500 went up 1.13%. Crude oil went down today 0.73%, and it closed at $111.30. Oil is still very high. It is very expensive, so this is still being a matter of concern, no doubt about it. Gold goes down 0.42%, and silver went down 1.63%. The 10-year Treasury yield went up today 2.51%, and the VIX, the volatility index, went down today 2.60%. So the fact that gold and silver went down today reflects that most investors and traders out there were in a risk-on mode, and that's the reason why they sold out of gold, silver, and so forth, and they backed tech stocks and growth stocks for the most part. Keep in mind, guys, that tomorrow, once again, Jerome Powell, 8 a.m. Eastern Standard Time, he's going to be speaking at the Bank for International Settlements at 8 a.m. Eastern Standard Time. As I just said, he shouldn't say anything new. However, this is an awareness that we need to have, to keep in mind, because he's going to be speaking pre-market. So if he happens to say something that might concern the markets when it comes to inflation, interest rate hikes, and so forth, then we might see a volatile pre-market trading session tomorrow. We haven't had any specific news when it comes to Ukraine. So as of now, the markets seem to have priced in the war in Ukraine as of now. We don't know if something unexpected happens, maybe Putin, invading Poland or attacking Poland. That obviously would cause the markets, would give rise to a broad sell-off in the markets. But as of now, I think that the war, as it is going on as of now, unfortunately, obviously, because we all want Ukraine to be in peace as soon as possible. But as of now, it looks like the markets already priced in the war. If we take a look at the sectors of the markets, higher multiple sectors were the ones that led the way today, guys. Consumer discretionary went up today 2.49%. Unbelievable day for Tesla, and a very solid day as well for Amazon. Communication services goes up 1.87%. Very solid day for Netflix, Facebook, and Google as well. And the two most important sectors of the markets, as I said in the introduction of this video, went up today a lot, guys. Financials went up 1.62%, and the tech sector went up today 1.44%. The lagging sector today was energy. It was due for some sort of short-term pullback, and it didn't go down a lot, and we'll still have oil above $100. Regardless, energy went down today, was the worst performing sector today, and it went down 0.74%. If we take a look at the advances and declines distribution, we can confirm that we had a very broad rally today, with 5,092 stocks going up and 2,452 stocks going down. And before going over the indices, I want to show you, guys, a bunch of trades that I closed in a successful way today. They trade on Adobe, by the way. Adobe is reporting earnings today, and we are going to go over its earnings report in just a second. So this morning, this was a day trade. I purchased the $450 call that expires in September of this year. I paid $5,200, and I sold out of this call. I wasn't going to play earnings on Adobe. I am no longer playing earnings, guys, since I got absolutely burned on a snapshot, and I am actually still holding that back. So I sold out of this call option, and I was paid $5,385. I ended up making over here $185. Coinbase. I closed today a couple of trades on Coinbase. Let me show you over here. Okay, in the case of Coinbase, this was a call option. Let me pull it up here. So on March 21st, I purchased the $175 call that expires in September. I paid $3,270, and today I closed this trade and I was paid $3,470. I ended up making over here $200. Let me show you another trade that I closed today on Coinbase. And this was a trade that I closed purchasing shares. So on March 18, I purchased 35 shares. I ended up making two different purchases, one on March 18 and the second one on March 21st. So on March 18, I purchased 35 shares at $182.91, paying $6,402. And on March 21st, yesterday, I made a second purchase at $182.33, paying $6,381. I ended up investing or paying a total amount of $12,783, and I closed this position today, selling out of my 70 shares at $187.22, and I was paid $13,105. I ended up making over here $322. Marathon Digital, another call option, guys. I have been in the casino recently. So with Marathon Digital, I purchased on March 1st the $23 call that expires in June, and I paid $885. And today I decided to close this position, and I was paid $1,015. I ended up making over here $130. And Lucid Motors, guys, it went on an absolute tear today, unbelievable, into the closing bell. And in the case of Lucid, I purchased 200 shares yesterday at $25.42. I paid $5,083, and today I had to close this position, guys, because Lucid went too far too fast. It got very overbooked in major time frames. So I sold out of these 200 shares at $26.46, and I was paid $5,292. I ended up making over here $210. So long story short, I made $1,047 today. I had a very solid day. I can't complain about it. S&P 500, what is going on over here? It goes up today 1.13%, and it closed today's trading session at 4,511 points. Okay. In yesterday's video, guys, I told you that the most important task that the bulls had to carry out today was taking on the 200-day moving average and closing the trading session, or any trading session, above the 200-day moving average. And they did it because they closed above 4,470 points. The RSI of the S&P is starting to get a bit overheated, 72 points on the 4-hour chart. So the most convenient, let's say, scenario for the bulls in the upcoming days would be a process of consolidation slightly above the 200-day moving average, slightly above 4,470 points, in which case, if the S&P can trade sideways for, let's say, one or two trading sessions, then the RSI is going to come down a bit, and that is going to allow the bulls to gather momentum in order to make another push higher until up to the next important task that they are going to have to fill eventually, up to the 100-day moving average at 4,550 points, without the S&P 500 being in an overbooked condition. In the case of the bears, I would say that the most immediate task that they would have to carry out would be closing one trading session below the 200-day moving average, 4470. That might be a sign of bearishness. Let's just put it that way in the case of the S&P, because the bulls would be giving up a very important moving average such as the 200-day moving average. When it comes to the technical situation of the S&P 500, and when it comes to the general situation of the markets as of now, guys, take a look at this. The S&P 500 from peak to bottom dropped almost 15%, and the S&P 500 as of now is 7% of the highs. That implies that the S&P 500 is halfway through relative to all-time high, relative to the highs. So we still have bad news out there, no doubt about it, guys. It looks like the market's already priced in the conflict in Ukraine. The markets, or it looks like the market's already priced in the beginning of this new cycle of interest rate hikes. However, we still have a bunch of concerns out there, guys. The war in Ukraine is still going on. We still have a very elevated inflation in the US. Oil is still above $100. So can the S&P 500 just keep on going up and up and up and get back to all-time high in 3 weeks or a month? I don't think that is going to be the case. We still have a lot of concerns in the wall of worry. So the bulls have achieved something very remarkable because they have been able to take the S&P 500 up almost 9% in a matter of a few trading sessions. So that's obviously remarkable. But I think that this is the moment in which the bulls have to consolidate in order to gather momentum, to keep on going higher. We eventually, without the S&P being in an overbought condition, and mind you, we are still going to see volatility in the markets. I am not saying that this is going to be, that we're going to have another debacle down to 4,100 points, unless something unexpected happens in Ukraine. But we are still going to see volatility because we still have a lot of worries out there. When it comes to the NASDAQ 100, the NDX went up today 1.94% and it closed today's trading session at 14,654 points. So I told you guys in the video that we posted yesterday, the most important task for the bulls is going to be taking on this 180 SMA on the 4-hour chart at 14,700 points. They closed slightly below the 100-day moving average. However, take a look at the RSI, 72 points. So the NDX is also starting to get a bit overheated. So the most convenient scenario for the bulls over here would be a process of consolidation slightly above 14,400 points, a previous area of support back from early October. So the RSI can cool off a bit and the bulls can gather momentum or can start to gather momentum slightly above a very important area of support to then make another push higher without the NDX being in an overbought condition. We have, the bulls have in front of them two very important tasks. The first one, the one that I just told you, 180 SMA for our short, 14,700 points, and a major task, guys, over here, the 200-day moving average at 15,000 points. So the bulls still have a lot of work to do when it comes to the NDX. In the case of the bears, I would say that they just need to bring the NASDAQ 100 below 40,400 points. That would be a sign of strength for the bears of the NDX. And now let's go ahead and take a look at Adobe, which should have already reported earnings. Nice day trade. The one that I was able to take today on Adobe. And what is going on after hours? Adobe is a bit lower after hours. So Adobe went up today 2.84% during regular trading hours. And it closed today's trading session at $466.45. I am going to pull up here the 1-day, 1-minute chart. And yeah, Adobe isn't doing much after hours. It is down only 1%. So what happened over here? Let's see. So EPS, let me scroll down. I have a lot of information here. Okay, EPS came in at $3.37, beating the estimate of $3.34. And sales came in at $4.26 billion, beating the estimate of $4.24 billion. So they beat on both EPS and sales. So maybe the fact that Adobe is a bit lower after hours has something to do with the guidance. Let's see. Okay, Adobe reduced ARR by additional $12 million, which represents entire digital media business in Ukraine for Adobe. So it looks like they are no longer in Ukraine. It looks like, Adobe says loss of services in Russia, Belarus will result in total ARR reduction of $87 million, expected revenue impact of $75 million. So they are kind of lowering guidance based on the conflict, based on the war on Ukraine. It's not a lot, but we're talking about $75 million, right? Let me see if I have anything else over here. The digital media revenue came in at $3.11 billion versus analyst consensus of $3.10 billion. Digital experience revenue at $1.06 billion versus consensus of $1.05 billion. So they beat on everything, guys. When it comes to the quarter that they are reporting as of now, revenue, sales, digital media revenue, and also digital experience revenue. But they are saying that their future revenue might be negatively impacted by the situation in Ukraine and Russia. So what could be happening tomorrow in the case of Adobe? So Adobe is trading after hours at $463. So I'm thinking, guys, that any process of consolidation tomorrow in the case of Adobe is slightly above $463. We're talking about a former area of support back from mid-February. Might be a buy, guys, because the report was decent. Let's just put it that way. And let's not forget, guys, that Adobe is trading as of now 33% of the highs. And yes, the negative consequence that Adobe is going to have to face because of the conflict in Ukraine is going to be at around a loss of $75 million, which isn't a lot of money when it comes to a company the size of Adobe. So I am going to keep a close watch on the stock of this company tomorrow, slightly above $463. If Adobe happens to hold this support, this might be a sign that the next important gap up to $480 might be filled. $480 is a previous area of resistance back from early March. So for $463 ish up to $478, we are looking at a 4% profit, guys. Nothing to sneeze at. And the RSI of Adobe is at 66 points. So I think that there is still gas in the tank over here when it comes to Adobe. And the second stock of this video is the stock of a company that reported earnings this morning, Carnival Cruise Line. Carnival goes down today 0.11% and it closed today's trading session at $18.93. And this is another company that is saying that they are going to be negatively affected when it comes to Russia and Ukraine. So the loss, because Carnival isn't making any profit as of now. So adjusted EPS came in at a loss of $1.66, missing the estimate of 89 cents. So they are losing way more money relative to what the analysts were expecting. And sales came in at $1.62 billion, missing the estimate of $2.30 billion. And I read something about Russia. So Carnival Corp executive says for the 4.6% of our capacity that was expected to call on Russian ports in the remainder of the year, we have decided to totally withdraw from Russia. So this is going to affect the 4.6% of the out of the total passenger capacity, let's just put it that way, of Carnival Cruise. It isn't much, as I just said in the case of Adobe, but this is going to obviously cause a negative effect on Carnival Cruise. And today we had Goldman Sachs lowers Carnival's price target to $21 from $23, maintains neutral rating. So we didn't have good news when it comes to Carnival Cruise. And guys, the stock of this company is an absolute no touch below $19.60. $19.60 is a previous area of resistance back from early December. So below $19.60, I am not touching Carnival with a 10-foot pole, not even with a 10-foot pole. because this is a chart that hasn't done much lately. Carnival has acted in a very sharp way recently. So the chart doesn't say that we are likely to see any acceptable recovery anytime soon. So maybe I'm thinking that if the bulls can take out $19.60, they might be able to fill the next important gap up to $22.32. This is a previous area of resistance back from early January. From $19.70, $20-ish, up to $22.30. We're looking at an 11% profit, but below $19.60. And if the bulls are unable to take on this level, we might see Carnival Cruise going lower, guys. Maybe $16 or maybe $15.40, because the earnings report wasn't good at all. And now let's go ahead and take a look at AMC Entertainment, the third stock of this video, which went on an absolute tear today, going up 15.13% and closing today's trading session at $18.26. So obviously, guys, take a look at the RSI of AMC, 79 points, very overbought, extremely overextended. The next gap that the bulls of AMC would have to fill would be up to $21. This is a previous area of resistance back from February 10th. However, can the bulls fill this next gap right away with the RSI of AMC being at 79 points? This is unlikely. So I wanted to pull up here quickly, guys, the 4-hour chart of the Russell 2000. You guys know that AMC is the second largest holding inside the Russell 2000. So the Russell 2000 has been consolidating inside a horizontal channel since mid-January. It actually looks better than the S&P 500 and the NASDAQ 100, because the Russell 2000 as of now is not even overbought. So the bulls of the Russell managed to burst above today and close today's trading session a very important area in technical terms, 2,080 points. This is a previous area of resistance back from February 10th. And on top of that, this previous area of resistance coincides with the upper line of this horizontal channel. So I'm thinking, guys, that if the bulls of the Russell can start to consolidate slightly above this previous area of resistance that now might act as a new support, slightly above 2,083 points, this might be a sign that they are gathering momentum in order to fill the next important gap up to the 100-day moving average at 2,160 points, which also happens to be a previous area of support back from mid-September and also back from early December of last year. So I'm thinking that if the Russell can fill this next gap up to the 100-day moving average, we are talking, guys, about a push to the upside of almost 4% for the Russell. This is an index, so this is a sizable push to the upside. So if this were the case, I think, and if we happen to see a process of consolidation of AMC slightly above $18, we are talking about a previous area of resistance back from late January, so the RSI of AMC can cool off a bit, then this might be an opportunity for the bulls to fill the next important gap up to $21 that, as I just said, happens to be a previous area of resistance back from mid-February. So did AMC leave the worst behind when it hit $13 back in early March? That might be the case, but if we are about to see a sizable and important recovery when it comes to AMC Entertainment, this recovery has to be led by the Russell 2000, according to my opinion. And the last stock of this video is going to be a Spotify. And in the case of Spotify, the new sponsor of Barcelona Football Club, it goes up today 5.02%, and it closed today's trading session at $147.47. And mind you, guys, this technical chart is still broken. We have a clear downtrend. As of now, Spotify is trading something like 50% of the highs. But something that caught my eye is the fact that as of now, we have a bunch of stocks in a very overbought condition, because the markets have been going up in a very consistent way during the most recent trading sessions, but this isn't the case of Spotify. We can see the RSI of this stock at 64 points, and as of now, the bulls already reconquered an important spot because they were able to burst above this 50 SMA on the 4-hour chart, this green line that you guys can see over here. So as of now, the bulls are about to make a test of $149. $149 happens to be a former area of support back from early February. So I'm thinking that if the bulls can take on $149 and good volume and momentum, they might be able to fill the next important gap up to the 180 SMA on the 4-hour chart at $160, in which case we are talking about a trade that would leave us a 7% profit. This 180 SMA, the 4-hour chart at $160, by the way, coincides with a previous area of resistance back from late February, so watch out for a momentum trade on Spotify bursting above $149 per share. And with Spotify, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays as well, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it differently because we talk about the markets in 2 different languages, English and Spanish, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys on Thursday, once again, 3 or 4 hours after the market closes. Peace out.